Hello, everyone. This is Socrates with the Hyperwave YouTube channel and Lucid Investments. Today we have a very exciting show planned. We are going to be taking a look at the Bitcoin price action as it relates to this weekly close that's coming up. Also going to be getting a monthly close and a quarterly close. Also have the S&P futures opening up right now, so we will be taking a quick look at that. With that being said, a couple exciting things to add is that first of all, we've got Tyler Jenks back into town and back on the show. And second of all, we've got Tone Vase joining us. So thank you both for being here, and very excited to look at some charts with you guys.
Awesome. Yeah, glad to be on. You've been doing a pretty good job there with showing your trades. Very ballsy of you, man.
Oh, well, I appreciate it. Definitely am, like being transparent. It just makes me feel comfortable in the sense that it can be ballsy, and I will probably have egg on my face sometimes, but it makes me feel comfortable if I'm sharing my strategies. I like to be as transparent as I can about the real-time trades that I'm looking at. So thanks again for the kind words. And how are you doing, Tyler?
I'm doing great. Just got home about 30 minutes ago from the airport. It was a 9-hour flight from Amsterdam, but then I had to drive 2 hours from Atlanta back to Chattanooga. Just got in, and I'm wearing my I drove to Bellagio and I survived shirt. That wasn't on this trip. That was a number of years ago. Bellagio's up in by Lake Como in the northern part of Italy. And it's one of the most difficult drives in the world, mainly because there are so many hairpin turns, and there's motorcyclists going in groups at 120 kilometers an hour around these curves where they're leaning into your lane, which is tiny because you're on cliffs going around this lake. So if anybody hasn't done that, you got to put it on your bucket list. It's one of the most beautiful areas in the world. And we just got back from Antwerp, which I had never been to, and I was blown away by it. Amsterdam, which I was blown away by. I wish I had more time. We've got a bunch of friends, as does Tone, up in that area, but just ran out of time. So this will be good. We'll let you get jumping right into it. Just another congratulations. For the last couple of weeks, you've been just ripping it apart on a lot of your short-term work and using some techniques that a lot of people haven't seen before. And because of that, our Hyperwave and our Consensio and various Telegram groups have just exploded with activity, with people going back and forth with each other and with you and me. Tone is used to that. He's got his own groups that are very, very active, and they're so active and big that he doesn't have a lot of time to participate, as I don't. So I really appreciate all the work you're doing, Socrates. And with that, why don't you jump on in?
All right. Thanks again for the kind words. And before jumping in, I did just want to mention that Tone has had a few great podcasts lately. One specifically that I'm thinking of is the show that he had with Ugly Old Goat. I just watched that yesterday, and it was a great show. So for anybody that hasn't seen that, would strongly recommend. And then there were a couple others that he did from a recent Bitcoin conference that I haven't gotten a chance to see yet, but I have that on my to-do list and have heard great things. So for anybody that hasn't seen those yet, would definitely recommend. And now I will go ahead and jump into the charts, trying to make sure I do this the right way. Let's see here. Okay. That should be good, I believe. Can you guys see see this screen?
Yeah, there you go.
You got it? All right. It looks like it's there on YouTube, so great. All right. So taking a look at the 4-hour chart really quickly before zooming out a little bit. Generally like to start by zooming out and then zooming in, but there is one reason why I wanted to start with this 4-hour chart. Was talking with Murad this morning and going over kind of what we saw looking at this price action, and I was really not liking this close below the 50 EMA on the 4-hour chart that occurred this morning, and that had me really thinking about going ahead and getting out of my spot Bitcoin, or at least a significant portion of it, and planning on buying back down around here. And he pointed out this trend line right here that certainly seems to be very important. That is where that next candle ended up finding support. So for me, on a short-term basis, this is the most important boundary to me as it stands. So we'll be watching that very closely, and also watching these EMAs. We see the 50 is starting to roll over a little bit, and the 9 is coming in for a bearish cross. If that does happen, then I will be expecting this trend line to break down. Until then, I'm very intrigued by this higher low and compared to here, and then this low, higher low here, higher low here could be potentially getting us a Bill Williams fractal if this continues to close higher, and then we get another higher low. So that is very intriguing, but I'm most worried about this bearish cross, which is coming in seemingly very soon. So from a short-term basis, that is what's most important to me. And now what I'd like to do is zoom all the way out. And actually what we'll need to do is get a longer-term chart.
When was
actually, hey, Socrates, go
Yep.
back to that.
You got it?
Yeah, I mean, if you may want to lock the screen in if I'm talking and you want your charts to keep showing. But if you go back to that 4-hour.
All right, let me make sure I got the screen locked in. Yep, I should. Okay, got the 4-hour pulled up.
For me, yeah, open up the sequential on that, on the 4-hour. That doesn't look like the 4-hour.
You are right. That is the daily. All right, here we
If
go.
you open the sequential, you'll see how the setup trend line is holding.
Ah, yes, very interesting.
So you want to keep an eye on that as well, because I think if we close below that setup trend line, it's in trouble.
I would agree. That would definitely take out the trend line, and yeah, that would be a very good way to determine. Sometimes it can be subjective whether or not a trend line is being broken, and that could be a better boundary to take a look at. A close below there would be pretty black and white, whereas a breakdown of this trend line could be a little iffy if it's in this area.
It looks like it wicked right down to it on the last 4-hour.
Got very close here. Back in here, it was just like acted almost perfectly. Closed above, wick down on 4 in a row. Here, it hasn't gotten back there yet, as it has been kind of creating a higher low.
And would you mind throwing a SAR on that? I just want to see what the SAR looks like. It looks like it's got to have broken.
Yep. I was watching that closely yesterday, and it broke, yeah, right in there. And now look at that.
Yeah,
so that's a very interesting.
Right on the setup trend. That's really weird.
Yeah, and very, very interesting from a risk-reward point of view. When you've got all of this cluster of support, you've got the setup trend line, you've got the Parabolic SAR, you've got the bull trend line. Entering right here and setting a stop right around here provides a very low risk, and targeting a return to back up in here would be very interesting from a risk reward perspective, based on this confluence of support.
That is looking like a serious support cluster on a 4-hour chart that needs to hold. Otherwise, this thing can go down and down quick.
Yes. Yep. If this thing breaks, then I'm definitely going to be looking to sell some spot. I would be pretty confident that if this breaks, we're coming back down to 9 would be my next major level of support, maybe that 92.50 area. But yes, I agree. This is a very important area that we should see some action here soon with the weekly, monthly, and quarterly closing. We should see either a sharp rally from this area of support or a breakdown and a sharp sell-off in the next day or so is kind of what I'm thinking.
The other thing I was thinking, I know how important those SARs are for you. It doesn't look like, excuse me, how important the EMAs are for you. When was the last time you had a break of the 9 below?
A bearish cross with the 9 below the 50?
Yeah, it's been a long time, right?
Yeah, great question. That is definitely something I pay close attention to in terms of these can only really stay in the same direction for so long. You know, if this has been in a bullish crossover for like a month, it's starting to get to a point where it really needs to get a bearish crossover and kind of see what happens from there. So you are right that the last time this crossed bullish was June 12th. So we're coming up on about 3 weeks, which is really getting pretty exhausted, just based on how long these moving averages can stay crossed in the same direction. This has been quite a while, and just based on that, I would be expecting this to cross. We just see that it's hard to stay in a bullish cross for much longer than 4 weeks or so. So that will be something to pay close attention to. If we can maintain this bullish cross, then it would really make me think that this is a good selling opportunity, because it really is looking like there's not too much gas left in the tank based on how long these have been crossed in the same direction.
Yeah, sorry to keep jumping in. You were going to go out to a longer time frame. Why don't we do that?
Yeah, let's take a look, zooming all the way out.
Are you going to the monthly time frame?
I was going to go ahead and do a 3-month real quick and shoot.
Yeah, because when you go to a monthly time frame, I got a comment because I watched you guys do a monthly time frame like a week and a half ago or something before Tyler went on his trip.
Yep.
And you pulled up the SARs and you were talking about how you're breaking it to the upside, but there's still like 10 days to go in the month and it needs to close above it.
Right.
And I was hoping you guys would highlight that some more because I'm not sure if it's still breaking the SAR.
Yeah, that's a very good point. And that's maybe we use them a little differently. When I'm looking at the SARs, and let's just go ahead and pull it up, is that I'm really not waiting for the close. I'm just waiting for the break of the SAR. What do you look at, Tyler?
Yeah, I look on the stop and reverse. I look for a penetration even on a wick. And that's the way Wells Wilder did it. I've done that forever, which is one of the rare times I don't use a weekly close on something. But the SAR kind of stands by itself. It just sits there and says, if you can penetrate me, that's good enough. And it almost always works. So what is this one looking like?
Yeah, so this is the monthly here, and that's really how I use it, in the sense that no matter where we close this month, the SAR is still going to be down here. We can close down at 7,000 and the SAR will still be here because this wick broke through it, and when it broke through it, it caused a new one to print on the other side. But that being said, it probably is significant to close above where that area broke. That's something that I haven't really considered too much in the past, and I'm glad that you bring it up, because that could be something to pay attention to, in the sense that it broke in this 10,400 area. If it were to close back below that, maybe that would kind of negate that buy signal and suggest that it'd be time to get out. Is that kind of how you view it, Tone?
Well, no, I actually wasn't sure, because if you look at the December candle, I guess it didn't pierce. It missed it by a penny or something. Sorry, the other December.
Right here. Yeah, so here in January, it got very close, which we'll see this happen quite a bit, where the wick gets super close, and like you said, it missed by about a penny or so, and then bounced back up. So yeah, this one, it never broke, even on a wicking basis. If it would have wicked a couple dollars lower, then it almost certainly would have. But as it stands, it wicked down to about like a dollar or two away. It looks like right in the middle.
It was mostly like, I've never used SARs until Tyler started talking about it. And I actually didn't know if to break the SAR, it's simply a wick or you need the close. For example, like when I have the TD sequential, you can have a 9, but then if it doesn't close, the 9's gone. Like you need the close.
Exactly. Look at the September of the last September. What is that? Right there. Same thing again. Came right down to it. Did not penetrate it. And then look 2 months before that in July. Or this is a quarterly. So that would be, that's the monthly. Did exactly the same thing. Came right down to it. It's an amazing calculation. And it's not just for Bitcoin. You'll find it over and over and over again. But take a look at where the new spot is. 3,000. Is where that new posting is. Amazing.
And I actually saw a neat post recently on Twitter that the last time we broke the monthly parabolic SAR, right in here, we ended up correcting down to the weekly parabolic SAR. So that's something that I've actually been keeping an eye on. We're just going to be jumping around all sorts of time frames. Back here, it looks like right here, I think that's about where we broke through the monthly and then came back to revisit the weekly, which did break, but that's where it did find support eventually. So that is something that I found pretty interesting, and that also happens to be right in the buy zone that I'm looking at. So 93.20 is where it's at on the weekly. So that could be something to keep an eye on, is returning to that after breaking through the monthly SAR, which is what we did last time. And that really is why I like this so much, is because it can be used for stop losses, that you can just leave the stop losses on the books. Where if the price at any point gets there, then your stop is triggered and you take a market stop loss and you get out. Opposed to most other things, you need to wait for a close. And if you're waiting for a close, a lot can happen. Like the price can move in a big way before that close comes. But just looking back at how powerful this is, like right here, I mean, this wick came up to within pennies of breaking it. The very next one, you're within pennies. You can have a hard.
And that's why. And that's why I was questioning it. Like, like to me, I wasn't sure if a wick will keep the, like, if the wick would have gone above the SAR, but then the close was all the way down. Does the SAR now flip to the bottom? And so what was the price? Like, you should have the value of the SAR on the left hand side, right? On that one, it was 995351, and what was the high? 995351. It was exactly the same.
Penny away. Yep. So one more penny and that would have broke, and
so
it wouldn't have had to go.
What about the next candle? The SAR was 963389 and the high was 963389.
One penny
Isn't that weird? It's really free.
It really is freaky, and especially in Bitcoin, where there's all these traps and wicks, these stupid wicks and bull traps and bear traps and whipsaws, and these still work. The traps and the whipsaws tend to not be able to violate these SARs, especially on a higher time frame. And we're talking down to the penny. You could have that stop loss set on the books a penny higher than this wick got.
Yeah, but that's the thing, right? This is on the index, right? I mean, if you pull up the monthly chart on Coinbase or Bitstamp, you could have a different picture.
That's absolutely true. You know, different exchanges will, which is one of the big problems with charting Bitcoin.
I'm sorry. This is too much of a coincidence, right? You mind going to the August candle or on this chart to the right? That one, right? Well, the SAR was 601385 and the low was 601385. This is like really weird.
It is. It's very weird. And I'll tell you why it's bugging me a lot right now. I'm still in my positions. And one of the things I talked about with all the people I was talking with in Europe is I might be on an airplane when something very big happens, because the SAR on the SAR on the weekly basis, if you pull it over to the right, what was that number? 91. That's
right now weekly SARs at 9350.
9350, and that's much higher than I wanted to buy. I've got buys in, or I've told clients, starting around the 8,500 level and then laddering down to 7,500. But if this thing breaks that, I'm not sure I want to be buying. Right now, I don't want to be selling. I am still bullish because of everything, all of my Consensio work, all of the rest. Not on Hyperwave. Hyperwave still has got a target of 1,000, and it can't say anything between 1,000 and 20,000. It's done its work now, so now it's just what's going to happen. So I'm using other things. But if I didn't realize this, look how big that move in the SAR was over the last two periods. I mean, it really accelerates. That's one of the things it does with these kind of huge wicks and huge candles that we just had on this weekly, just this monster, and that pulls it up. It spaces it differently because of the size of the high-low close on the current SAR. So 91, 92, 93, 94, maybe that's where I would be buying now. But if that SAR is taken out, I'm not sure. I think what I will probably do is I will pull all of my 8,500, 83, 8,000, 78, and $7,500 numbers out, and I will wait for something down in the sixes again. But that's just speculation on my part. Socrates and Tone have both said over and over again recently that it's not just what the price is, it's how it got there. And you can have the exact same price, but if it gets there in a long, slow, controlled, disciplined way, it carries far more weight than these tremendous moves up and down. And because of that, you'll hear good analysts changing what they think in terms of price. Tone is taught over and over again, there are two things, price and time. The same price over a shorter or longer time period gives you a completely different technical picture.
Yep, absolutely.
Yeah, sorry, guys. My last quick comment on SAR. Look, I'm not familiar with the parabolic SARs, but I mean, I just pulled them up on a weekly chart of Bitstamp, and within the last 6 months, I found two more instances. One where the SAR is exactly at the low of the weekly price to the penny, and another one where it's exactly at the high of the weekly price to the penny. So I don't understand how this indicator works, but it must be adjusting in real time based on that candle.
Yes, that's exactly right. It's exactly right.
It can't be a coincidence that it's reversing. Like, to me, this is an indicator that is adjusting in real time. And I guess when it flips, that means it will stay flipped. And this is what I didn't know about the indicator because I never studied it. So to me, I don't like. I like the close determining my stuff. This is why, you know, like the RSI will adjust with the candle close and stuff like that. Yeah, so this is interesting that this indicator adjusts in real time.
Yeah, it really is. And that's the way he designed it 40 years ago. But now remember, he designed it for the commodity market. Fast-moving markets, heavily leveraged, very smart players. So he really knew what he was doing. But I've seen it in stock markets, stock indexes, ETFs, even mutual funds, which makes no sense to me, but it works well. I've also seen it work very well with currencies. So it's just another tool that you use along with all these other tools to draw a conclusion. And that's one of the things I really like about Socrates' work, that it's never just one thing or two things or three things. And the same thing with tone. It just blows people's minds that Tone says that the sequential system or the TD system, with his variations and without them, is only his third most important technical tool, not the first. And that's very important, I think, for people to know that you use an indicator because you're confident in it, but it only tells you X amount of things. And by overlaying other things on top of it, the picture gets clearer and clearer if you know how to use those other indicators.
Wow, we're dropping big. That's the weekly candle? I mean, the shape of that candle is not good.
That is for darn sure. That weekly candle is not good at all. And that's actually something I was going to ask is, have you ever seen a weekly wick this long in relation to the body? I mean, that is the high is up here at 13,880. Now we're down to 11,170. So, I mean, that's over 25% or so of a wick on a weekly candle. This is something that I don't know if I've ever seen anything like it. Have either of you on Bitcoin?
I have once in the opposite direction. That would have been the week of February 5th of 2018.
Yeah, right here.
Yeah.
Very interesting. Yeah, sure enough.
And look what it led to. It led to 100% upswing that many people, including myself, thought could have led to new all-time highs, and then it failed.
Yeah, big time. That was a killer. That caught more people that I've talked to than anything else, is that one. Some people got caught on the initial bounce from 11,000 back to 17,500, but almost no one had gotten out of it. But depending on where you got out of it, that a move from 11,000 to 17,500 in a matter of no time at all, and then total collapse down to this close to 6, the big wick, and then a tremendous month-long rally. And if it wasn't for that fourth candle peaking out right where the third one did, but lower than the wick of the week 2 weeks before that, it'd be very difficult not to and look, the SAR didn't even get close to it, but then that's all she wrote. And every time after that, it just kept failing. 8,500, 7,500, then the consolidation at 6,000. So important week.
Yeah, so I mean, the good news is that if we do repeat that environment, but in the opposite direction, it means that you are going to have a 50% correction, but a 50% correction will keep you significantly above all, the bear market lows, and hopefully that gives us that higher high that can set off the bull market.
Exactly.
Absolutely. Yeah, that's fascinating. And I always like to kind of think in terms of that markets like to have an equal and opposite reaction. And it's interesting to think if that's what could be happening here. Let's look at what preceded this thing. It was a huge, huge sell-off where everybody was running around with their heads cut off. They didn't know what in the world was going on. They thought it should have found support every level before here, and it kept falling, kept falling. Right in here is kind of the inverse of that. Everybody thought that we should resist around 6,000. I was very confident in that. Then everybody thought we should resist here, and then we just kept going through until we finally get this sort of blow off top situation that you kind of see on lower charts, or this huge extended wick that is kind of the inverse of this. And then what did this lead to? It led to a month-long counter trend bounce that took the price about 100% from the bottom of that wick. So if we look at from the top of this wick down around 7,000 or so over the next month would be an equal and opposite reaction compared to what happened here. And both are following moves that are basically unprecedented. So that is very interesting, kind of viewing.
Hey, Socrates, can you also check if the drop from 20,000 to 6 is approximately inverse percent from the rise from 3,000 to 14?
That's a good point. That's interesting.
Good question. Let's see here.
So that is a 70% drop. So what's our inverse? Well, you want to go the other way, right? You want to go, you want to start at the top and go to the bottom to see if that's equivalent.
Huh. Very, very close. That's for sure.
Yeah, 77.
Let's go ahead and make sure this is exact. Yep, very close. So that is very interesting. Absolutely.
Right. So this is even a bigger rise than that was the fall.
So yeah, potentially would lead to maybe a slightly bigger drop if it wasn't equal and opposite reaction, taking it to 65 or so.
Add maybe 5% on top, going down to 55, 54. Not that. It's not going to make that much of a difference.
Very interesting. All right. So I am going to go ahead and zoom out. Take this quarterly close is something that I have been intrigued with, in the sense that this is something that was brought to my attention by David Puell at Kino Shaking on Twitter. He pointed out how this could be a very, very crucial area. He pointed this out in real time while the price was still rallying and pretty much full green bodied right here. Was he said that this is the crucial area of resistance for this rally. If we can make it through 13.9, then he saw nothing but open air above. But he did think that this would be a significant area of resistance, and that is definitely something that I agree with. I wouldn't have noticed without him posting that chart, but I find this very interesting. Anytime I have higher time frame candles that have an open and a close in a same area like this, does act as a significant area of horizontal resistance. Are you guys seeing that as an important boundary?
Yeah, can you just do me a favor? Can you just put your cursor on that big green candle? I want to see what the close was. Well, actually the other one, but yeah, that one. What is the close? 13,880 on the dot. Now put the cursor on the current green candle. 13,880 on the dot at the high.
Wow, unbelievable.
Isn't that incredible?
That's spooky. What the heck is going on? It's like there's two gigantic players that are picking these points out and either dumping or buying when they're hit. It's weird.
Now, I think it's weird, but I don't see any significance to that particular number.
I don't either. I don't either, except it was above what everyone expected, which is kind of 13.5-ish. And where is the close on this green candle if it closes right here? That's
right.
1100.
11,000. I'm still amazed at the 10,000 to 11,000 range. When you take a look at it at shorter and shorter time periods, you just see over and over again, when it gets above it, it gets sucked back down into it. And when it drops,
we just dropped about $300 in the last few hours. I would not be surprised if we close today in an hour and a half below 10,000. That would not surprise me at all.
Yep, and that's just what I was kind of thinking. Seeing that big support cluster and knowing that the monthly, quarterly, and weekly closes are coming up in an hour and a half.
Oh, take a look. Take a look at the 4-hour, man. It's approaching.
All right.
It's approaching your trend line. I don't even have it drawn. I just mentally know where it is.
Yep, sure enough. Let's just throw on those SARs. That'll be the easiest way to determine and take a look at your.
And the thing is, and though the 1 hour just broke down.
Did
it? Is that right?
It closes there.
Okay, so the number is 10,765 as far as I'm concerned. So I'm just going to draw a line there, remove the indicators, then we'll zoom on in to that hourly chart.
And it's pretty much like it's gonna close below your trend line that you had earlier on the show.
Yeah, it looks like it might be time for me to start scaling out of some spots. So yeah, we do see that this was in an important area based on the moving averages. Sure enough, this will be very important to me. This bearish, the death cross with the 50 and the 200 EMA. If we do break down here and that breaks down, that's going to be telling me to go ahead and scale out of spots and expect to be able to buy back at lower prices. So yeah, we are definitely in a very important time, and that's kind of to be expected with the big monthly and quarterly candles closing. That's when you expect a lot of people to be some big players to be stepping in, and at that point is when some volatility will tend to occur. So looking at the 9 and the 50 EMA on the 4-hour, getting very close to a bearish cross there, and then the 50 and the 200 on the 1-hour, getting very close. For now, it's still a little too early to do anything. I do think this trend line is still intact. It still looks good, but this is the real do or die area right here. This is where it needs to find support. As far as I'm concerned, can't even really wick down there for me.
Well, let's let's take both sides of that. First, the bearish side. We break the trend line, we break the SAR, we break the setup trend line. Tone, where does it go technically from your reading of the charts if those areas are taken out in the next hour and a half?
It's pretty bad because that's not, because if you go over to the, I know you guys like the short term, but the day is about to flip. Everything is about to flip in an hour and a half. If you put the daily chart on, and you throw the sequential on, you're coming off a 9. And not only that, it's looking like a new daily low close since the blow off top. You have another trend line there. If tonight's candle opens as a red 2 going below a red 1, going below that green line that you have drawn there, I mean, this thing is in trouble. And you pick your poison. You're so extended above the moving averages. And if I glanced at this earlier before we went live, this is like the 3rd or the 4th highest rise we ever had above the 200-day moving average by percentage. And So, and it didn't end well at all the other times that happened.
Now,
yeah,
jump in just a sec, Socrates, but I've only caught parts of what Willie and Murad and David have been saying about their indicator. That I know Willie said that it has never been this extended on the previous moves. Extended meaning the distance between those two lines that he uses to do his calculation. And I haven't heard him draw a conclusion from that other than it's in this red zone and very, very extended. Tone, have you heard them conclude, any one of the three of them, what they're thinking?
I haven't really been paying attention to their work, but I remember I learned about distance from the 200-day moving average specifically from a TA workshop I attended at the Bloomberg building by their CMT team, and that was back in like 2007 or something, before the .com bubble, when they did a lot of work on that. But for me, I mean, I know I sound like a broken record waiting for my 50% correction, but I really think this is it. This is like everything is pointing to that $6,000 to $7,000 range right now.
Yeah, I feel that. That's why I was saying that before about me maybe pulling out tonight those buy points, because I'm not sure I want to own this from 7,500 to 8,500. I still do want to own it in the low sixes where we bought it before, but I don't want to ride down positions I have if that's how far it's going to go. So I'm going to be watching this, if I can keep my eyes open, very closely.
And by the way, and that $6,000 to $7,000 range better hold, because while maybe a month ago when we might have topped at like $9,000, I would have considered 5,000 and 4,000 potential support, but that's because those areas would have been the 50% correction. This means that the $6,000 area must hold, because if it doesn't, sub 3,000, here we come.
Yeah, right. I agree completely with that. We're probably the only two people in the world that do, but to me, that's exactly what I'm thinking. This is going to be a very exciting 30 days coming up, I think. Socrates, sorry I cut you off. What were you about to say?
No worries at all. Maybe you can add me as a third person into that category. I absolutely think that about 62 is kind of my do or die area in terms of that's where the 200-day moving average is. That's where that major horizontal support is. If we can put in a higher low in that area, then I think that's going to be the best buying opportunity of this century. And if we can't, if we do break down 6,000, then I am going to really be probably turning back bearish and looking for a big drop. And I do not think 3,000 would hold if we then come back and retest that area. People would be so freaked out that I would be blown away if that area did hold. So I do agree with what you guys are saying there. And just real quickly, to sum up what I was looking at on the higher time frames, is I do think that these higher time frame closes are extremely important, specifically on the monthly and quarterly and even yearly basis for assets that have been around for longer. Those closing prices, to me, it's kind of spooky how well they act as support and resistance, and then once they break down, how much the price will basically continue in that direction. So I've drawn a couple of my next areas just based on the quarterly close from here acting as resistance. The next area of support that I would expect to see out of these big money players that are trading the quarterly chart is right in here at about 6,600. That's based on this close and this open. So I do think that that is a very important area, and that's only based on 3-month charts. And that is like right here, we see that again coming down to the penny where this resistance came in. To me, that's more than just a coincidence. To me, that's extremely significant. And what I have noticed is that the longer you zoom out, the higher time frame charts you use, the more it seems like there's big money players waiting at those thresholds. Like right here, I think that there was, like Tyler said, maybe it's just a couple traders or group of guys picking spots to target as areas of resistance. I absolutely think that's the case. I think that there are big money traders out there looking at these quarterly closes and setting up enormous orders right here to sell. And therefore, if that's what they did, they're probably going to be looking at buying right here at 66. So these closes are actually really important to me, and I think can be used in and of themselves to identify very important areas of support and resistance. And when they are on higher time frames, that's when I seem to find them to be a little more reliable, or more in the sense that it seems like there's some big money traders that are really using those to their advantage. So I just wanted to sum that up real quickly on that 3-month chart. We can go ahead and zoom into the monthly, kind of notice how we get the same area of resistance based on these monthly candles. That's really significant to me, seeing multiple time frames identify the same areas of support or resistance. Very significant to me. So if we do the same thing here and try to identify the next potential areas of support, the weekly looks, or the monthly looks a little different than the 3-month. So I would probably leave that there and then add one more right about here. So this could be confirmation for that sort of 6,000 to 7,000 area is coming from the quarterly closes as well as the monthly closes, and that is something that I think is very important. So just wanted to cover that. Anything that you guys wanted to look at on the monthly chart?
Did we take a look at the sequential? I know it's very bullish, and that's one of the things that has kept me in after I said I'd get out at 8,800, then 9,000, then 9,400. Then if it could get through 10,000, I'd take some profit, then 11,000. I'm still in this stupid thing. Because we're sitting on a 4. Tone, what are you thinking on this monthly using the sequential?
It's bullish. I mean, as much as I want to say that the sequential 13 matters, there is another sequential count in the background. Now, I will also say that the other sequential count in the background, Wall Street doesn't see it because it was a 9 following a 9. And also, Socrates, you mind sliding the chart over? I want to see if that was a 999 on the monthly or not, because I can't tell.
I think it was right here.
It was a 999. So that means that 13 should not even exist according to the official Tom DeMark indicator. So you take that 13 with a grain of salt, and sequential is bullish with a green 4 above a 3. But sequential also didn't do a great job on that blow off top. It was off by 1 month.
Right.
But that was a big month, right? That's a 100% move.
Yeah, sure was. What about on the bottom? How would you interpret the effectiveness of sequential monthly on the bottom?
Yeah, see, the bottom was a tough one because of that one silly green 1 stuck in the middle there. So it kind of threw the count off. And other than that, the 9 would have came around that 4 candle, probably 5, 6, 7, 8, 9. The 9 would have been the capitulation candle on the 4 and would have given us a much better timing opportunity. So the sequential on Bitcoin, I mean, it's bullish, but I would not, I don't think I would be using it. Basically, I don't think Bitcoin has enough history to trust sequential on a monthly scale and forget about quarterly or yearly.
And what about closing the month lower than halfway from bottom to top on the wick?
Again, it's borderline. If there was no bottom wick at all, I would consider that more of a reversal candle, but it's still a pretty big body. And it's still a pretty big body. And the fact that there was a wick at the bottom makes me kind of be neutral this candle. Like, I'm not going to say that it's bullish, but I'm not going to call this monthly candle crazy bearish either.
Yeah.
Interesting. And for me, the TD sequential.
But again, Tyler, we still have, I think, an hour to go, right? When do we close? 8 p.m. Eastern time?
8 o'clock. 8 Eastern time, yeah.
8 Eastern. We still have an hour to go, and we're already down to 10,875. Like, if we close below 10,000, I'll give you a different answer. You know?
Yeah, absolutely. It's Socrates, if you don't just mind pulling the 4 hour up again, because this thing is moving very quickly. And then I'd like to talk about stocks. We had what I interpret to be very bullish news over the weekend. You're right, Tone. We are fully invested in the stock market right now, as of a week ago or 10 days ago. And it kind of stalled out, but it hasn't scared me at all. But I think my assumption is that we're going to see that we're going to get a big day tomorrow, and that big day could take us up to 3,000 pretty easily.
Before we go to stocks, if you flip to the weekly candle, this is what I'm finding. It's now flipping between a red and a green candle.
Wow.
I will do that, but very quickly wanted to provide some input on the monthly TD, and it is something that is actually very important to me and something that I pay very close attention to, and there's a couple ways to kind of fine-tune it. First one, I believe I learned from Nick Core, who will use the Henkin-Ashi candles on the monthly chart. With
which reminds me, I'd like you to pull up your work on that with that twist. That was really weird, but I'm wondering what's happening to it now.
Yeah, the TD monthly on Henkin-Ashi did such a better job on Bitcoin. The reason why, I didn't pay attention to it is because to this day, I never Googled what Henkin-Ashi candles are. I just never studied them. I never learned them. I never paid attention to them. But it looks like they've been they predicted Bitcoin in the last 3 years, or 4 years, as well as anything in the entire world of technical analysis.
I agree, and I am in the same boat that you are. You know, there was no such thing being used when I was learning all this stuff, and Socrates has really picked it up quickly.
Yeah, it's actually something that I don't know a whole lot about either, other than the fact that it works. And I do want to look into basically what's going on here. Why is it so different than just normal candles? I do need to understand that better myself. I really don't know. But I do know just simply that it does work. Like Tone said, almost as good as it's worked anywhere ever. We see it called the exact bottom in 2015, called the exact top in 2017, called the exact bottom in 2018. So to me, that's extremely significant and something that I pay very close attention to. And then another way that the TD can be fine-tuned on a monthly basis is, instead of using the 1 month, use 31-day candles. For some reason, that can even be a better tool. Look how the Henkin-Ashi had a big wick at the top, didn't quite catch, I guess it would have been here, but this I just found fascinating, how it's a perfected 9 that closes right at the top, right at 16,500 or so, and then you get this perfected 9 right at the bottom. This is 31-day candles instead of monthly. Back here in 2015, you got an 8 at the bottom. You didn't get the nice 9. But using the TD on either the 31-day chart or the monthly chart with Heikin-Ashi candles is something that I find very powerful and is very important. So now, after going through that, we can go ahead and zoom into the weekly. You said we're getting a price flip.
Yeah, well, you're getting a.
Wow, look at that. Jeez.
Oh, yours is a little bigger now. It was, yeah, well, we were down to 850 earlier, and that was already a red candle like 5 minutes ago.
Wow.
Now, if that becomes a red hammer candle, that becomes pretty interesting. And the other thing I was going to say on Heikin-Ashi, the only like reason off the top of my head I can come up with as to why Heikin-Ashi is so much more useful on Bitcoin than perhaps other assets is because Bitcoin trades 24/7, and Heikin-Ashi is more designed to average out the price instead of using this arbitrary, midnight GMT close.
Interesting. It'd be interesting to hear Nick explain that too. We should do a show with him.
I agree, absolutely.
Oh, hey, can I just jump on screen share before I know we're leaving Bitcoin for the traditional market.
Absolutely.
I just want to show one quick thing. So I'm going to steal screen share for a second.
You got it. Right before doing that, I just want to throw back on the cloud because this is something that's been interesting to me. This was a buy signal last week. So something to just keep an eye on is falling back into the cloud, specifically on a closing basis, would very much negate that buy signal. But until that happens, that should be a significant area of support. So one thing I was keeping an eye on, and now I will turn it on over to you. All right, you should be good to go.
Yep. Actually, you could have still left yours on, but it doesn't really matter. So this will be really quick, only because right before the show, I was really curious where the words buy Bitcoin ranked on Google Trends. And I can spin this as to why Bitcoin should fall, and I can also spin this as to why Bitcoin should rise. But I found it really interesting that we are ranking lower than we did back in May of 2017, and the price of Bitcoin back then was like $1,200.
Wow, unbelievable!
Right. So I think this is significant, but I'm not exactly sure why. So I can now spin this as to say this is why Bitcoin is going to go to new all-time highs. Look, we're at $10,000, and people care about it less than they did back when it was $1,000 over 2 years ago. And so that is a positive for why Bitcoin should continue to rise, because the public mania is not yet there. I can also spin it as to why this means Bitcoin is going to fall, in that this is not a real rally where people are participating, and it's kind of bullshit insiders manipulating the price by thin order books, and they can kind of rise it, get out, and then dump it onto the few people that are buying into it. So I can spin this in both directions. I just think it's very interesting how we're significantly lower than most of 2017 before the big spike.
I think that is a very bullish picture, if you ask me. Basically, it tells me that the Bitcoin has been consolidated into stronger hands, and just looking at the last time that we had a similar kind of move here, it looks like towards the end of 2016. 2014 to 2016, we're trapped in a flat, narrow range where nobody's interested at all. And then once we finally break out of that range, now the momentum starts to build. And that's what I think we're just doing now, is we are just now breaking out of that range. And I can subjectively say that my experience kind of confirms that, in the sense that I'm having friends start to ask me about what's going on with Bitcoin. Like, some people are starting to get interested, whereas over the last couple of years, they were not interested at all. So hearing those first kind of whispers from my friends who know that I'm into it, and they're starting to wonder what's going on, makes me think that people are just now starting to get their interest peaked again, and that there is a tremendous room to the upside for for the public to come in and provide that sort of mania that you get in the parabolic phase.
Very
interesting.
interesting.
I'm with you, but friend squalling is usually a sign of a top. So again, it's a double-edged sword, right? Like
Yeah. I can definitely see two arguments. Absolutely, but I think that this being so far down on the chart is not too much of an indicator of a top. And in the first friends that call you, I don't think are signs of a top. It's the ones that are the last ones to the party. Everybody's got those friends that you try to talk into it, and they just don't have any real interest. And then once they start getting interest, you've been hounding them for the last year, and now they're getting interested. That's kind of a sign of a top. Whereas the ones who are more just they stayed away last time because they knew that they kind of missed out, and they are now kind of coming back around. Like, well, now it looks like I'm not necessarily buying the top, so they're kind of getting interested again. It's definitely very subjective, like I said, but I do think that the first whispers is a very good sign. Whereas when everybody's asking about it, that's the sign of the top.
Quick funny story. I'm sitting in a restaurant with Lisa, my wife, up in Amsterdam at one of the best restaurants I've ever been to in my life. And very, very expensive. But you get either a 5-course, a 6-course, or a 7-course meal. And for those that drink wine, with each of those courses, they bring another glass. Very quiet, 25 pieces of silverware. Each piece of silverware goes with the next thing that comes, one of those kind of places. And it's kind of stodgy and boring, and nobody's talking above a whisper. The guy next to me and his wife turned and asked, "What is it I do?" And I said, "Well, believe it or not, I'm retired, except I've been doing some stuff with cryptocurrencies and Bitcoin." And he says, "Bitcoin, interesting." And he said, "It's just a big scam, right?" And I said, "Well, yes and no. There's 4,000 other cryptocurrencies that are a big scam, but not Bitcoin." And he said, "Why is that?" I started talking about it. His wife started getting mad. My wife started getting mad. The waiter got mad because they have to bring this stuff, right away. And they were drinking wine. The people next to us were drinking wine. And the wine was beginning to pile up because everybody started listening. Now, all of a sudden, the table to my left says, "Oh, I've got EOS and Cardano and Martin." Now, this guy is a retired pilot, and his wife does not like what he's doing and what's going on now. So they start talking. And then the couple behind us, a mother and her son from Stanford, out in, they live in San Francisco, but Silicon Valley, all kinds of connections. He starts looking over his shoulder at what we're talking about. I'm getting louder and louder because I'm getting more and more excited. I keep missing courses. They bring them in, and then the next one comes. This went on for an hour. We started at 7 o'clock, and 8 people. That's all we did. Now, I just taught these courses, so I had all these numbers and stuff, and I was so excited. Now, but that's everybody around us. And we went till midnight and closed the place down, and most of the people didn't end up eating anything. So something is going on that leads me to believe it's much more like a top. It's the taxi cab driver, telling the guys on Wall Street what to buy, kind of a situation. So just a little anecdote. The other thing on that chart, though, Tone, is hasn't volume really been slow in this run up relative to what you would be expecting if this thing was for real?
It really has been.
Yeah,
I'm watching that 4-hour. Hey guys, we're pushing daily lows right now, and we still have an hour to go. And it's going to get interesting. I mean, I'm watching that 4-hour chart. It's starting to flirt with that setup trend line.
Wow, unbelievable. Well, why don't we quickly go to the stock market and then we'll close taking a look
the S&P, the futures on the S&P just gapped up big time.
Yeah.
On the stock market, who wants to take?
We should be at a new all-time high in the futures market right now.
I think we probably are. And the fundamental news is no backing off on the tariffs by Trump, giving in on Huawei to a certain extent on Trump, and then him extending a hand to Kim Jong-un. And I haven't heard how that worked out. They were supposed to meet at the demilitarized zone and shake hands. We'll find that out in the morning. But just based on that, it looked, and extending the time period to come up with a deal on the tariffs with China. So I fully expected to see a big move tomorrow. Do you have a chart on that you can pull up, Tom?
Yeah, I'm ready with the chart.
Okay, great. We're fully in it, and I'd tell everybody we were in it for 10 years. We got, or not quite 10 years, but then we've been in and out, in and out, in and out for the last 18 months. Sometimes 100% out, sometimes 50% out. We got 50% long back in December. We added the other 50% in April, and then it began to correct. So we dropped back to 50%. But then just in the last week or 10 days, we're fully invested. It really looks to me like it wants to go. Yeah, that looks good.
Normally, I don't like gaps like this. Gaps need to close, but this looks like a breakaway gap. Like, it's probably a little too early. Markets don't open for like 14 more hours.
Right.
And, but this has all the signs of a breakaway gap. And once the stock market breaks 3,000, it's off to the races.
I agree completely. I've got 3,300 as my target by the end of this year. But it's all dependent on this being a valid breakout. And if it holds that gap, then that is a breakaway gap, not just from current activity, but going all the way back to the May top in the S&P and the September tops in some of the other indexes.
Yeah,
so
this is going to be interesting. If the S&P 500 can break out at 3,000 and rally to 4,000, then there could be, a bit of a recession and a 25% drop in the stock market, taking it back to 3,000, and that's going to be clean, opening up the door for 5,000 to 7,000 on the S&P.
Yeah, that's one of Haejin Lee's interpretations of Elliott right now, and so very interesting. Now you've got this cup and handle that Socrates has been talking about, and we need to hold this too that we've got, but a big move up from here, and you've got some amazing targets.
Doesn't look like gold started trading it. Oh, I'm on a delayed quote. I might have to wait about 10 or 20 more minutes to see the gold price.
If you go XAU USD, I think you can pull it up.
It's okay. Well, I think we'll still be on in 5 minutes. I'm still keeping an eye on Bitcoin. And yeah, it rallied up a little bit. Like, it just doesn't want to break that setup trend line on a 4-hour. As close as it gets to it, like, look at this. It was, we missed it by about 40 or 50 bucks. The low was 809, and this thing is at around, he missed it by $40.
Wow, unbelievable. Incredible. And you can see the projection on those moving averages really beginning to come down fast.
Yeah, but it doesn't have to close below it on this candle. It can do it next 4-hour candle. Like, it's got plenty of time. But let's just say that all the lower time frames look terrible to me. Here's the hourly. It just broke the prior swing low. Started off on a red 2 below red 1. Now it's red 3 is about even with the red 2. The 4 hour is bearish. I mean, the setup trend is holding it by a thread, but this is not a good picture, right? It's a big drop, a little bit of a rally, lower high comes back. I mean, if it rallies into the cross, all it's doing is making a descending triangle at setup trend line.
Good point. Socrates,
So,
how do you read that in terms of a descending triangle?
Yeah, I would like to see that first bounce be a little higher for it to be a descending triangle. I'm really still seeing a possibility of a big W. Seeing that first kind of rally not be able to exceed the 0.618 fib, and then it come back and create a higher low on that 4 hour is something that I'm thinking if we do take out that intermittent high, then that is a buy signal for me. I don't think I'd be taking it, but I'm not really thinking that it should turn into a descending triangle because that first bounce is a little too small for my liking. And I like seeing that small bounce lead into either a bear flag where you instantly break down horizontal support. That didn't happen here. So I'm still thinking that it could turn into this big W sort of formation on the 4 hour.
yeah, guys, but it's the daily that concerns me the most right now. Because, I mean, if the next candle starts off as a red 2 below a red 1 following that red 9, which wasn't perfect, but it's just there's no support here. There is some support in the vicinity of 9,000 and the 50-period moving average. But if that cracks, that's it. I mean, like there's nothing between 9,000 and mid sixes, and then you have the 200-day moving average, you know, and by then it'll probably come back, go all the way up to 6,000, unless we fall in like a day and a half. So there's really not that much to cling to here on a daily chart.
No, there really isn't, especially if we close below about 11.2, where we see 2 candles ago we had the 7 close and the 8 open. That's a very significant horizontal for me. Closing below that would be significant, and really not only the daily but the weekly. I mean, dang, if that thing closes bearish or even very close to it, that's just going to be such an ugly candle that yeah, it would be hard. There wouldn't be much to cling on to. I sure wouldn't think.
I mean, I would be very surprised if we close above 11, even forget 11.2. I mean, if I was playing, you know, binary options right now at 8 p.m., I would take the under on 10.8.
Yeah, I could see that. That's a very interesting bet with all that support from the SAR and the TDST and the trend line. That would be an interesting bet that I don't know if I would take either side. But yeah, they're kind of
under 10.8 is basically I'm saying we're going to be right at the setup trend line, which is at 10.77.
I like it. Yeah, that's a very interesting bet. I like it. But as long as it stays higher than that prior low, to me, it's a pretty bullish setup. But it's on a lower time frame, which is not more important to me than what we're looking at on the daily and the weekly. So for me, I'm waiting for that last confirmation before selling some spots and having to stay patient until then. And this can be a tough time when everything is kind of telling you that you should probably be getting out, and then you're having to stay patient. That can be difficult. So I do agree that there isn't much to cling on to, but there is enough such that I'm not selling yet. But that could change in a minute if we break down that SAR and that TDST, then I'm going to be out.
Look, I am eyeing that low. I mean, the low in the last 3 days came in last hour, and that was 10,810. Let's say, let's round, right? 10,810. So below that puts you under 10,800. And everything here is telling me we're going to close this month below 10,800, which will make the weekly chart, the weekly candle red.
Yeah.
Wow. Look at that weekly. It's just it looks a little like something you see at a cemetery.
Yep.
Guys, it's 1:30 in the morning Amsterdam time, even though it's 7 o'clock, 7:15 my time. So I can't keep my eyes open anymore. Thank you very much. You guys stay on as long as you want to. I'm gonna run. This was unbelievable for me. I'm gonna listen to it all again. And
thanks, Tyler. I'm just gonna pull up gold XAU.
Yep,
yeah.
XAU. And I'm going to take a quick look at the Turkish lira because that is at a very crucial spot.
Okay,
as well.
good. I'll check you guys out and just after dinner tonight.
I don't think so. XAU isn't showing me the overnight price, Socrates.
XAU USD.
Right. That seems to run constantly. I look at it all night long.
Oh, yep. Gold dropping. And there it is.
All right. Well, thank you very much for joining us. And
yeah, thank you guys.
We'll look forward to talking to you tomorrow.
Great vlog. Thank you, Tone.
Thanks, Tyler.
See you guys.